Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 index. It's ticker symbol RUT. And if you've been following along with the market guys weekly market reports, you'll know that I leave my lines on the chart so that you can see how the forecasts have played out. Now with the Russell 2000, you'll see this line right here. And before I get into the recap of what we talked about last week, I want you to know that this line was not on last week's report because Monday evening we had an open house session and I added this on for the attendees to let them know that the markets were showing pretty bearish conditions early in the week for that particular Monday, and I thought the markets would drop a little bit more, and that's exactly what happened. So now for the recap. Last Friday was right here, and I said that we would most likely hold the resistance and pull back from that resistance. And again, as I zoom in here, you'll see that's exactly what happened. Again, this was Friday. On Monday, we had a bearish engulfing pattern, which is a fairly significant sell signal. And so Monday we had the bearish engulfing pattern. We dropped on Tuesday. We went even further on Wednesday. We hit that target from my Monday night session. And then we bounced, winding up, look at this, winding up right at my target area from last week. So what I do here is I draw my diagonal lines, and the end of the lines are where my target prices are, just so you know where I stand for next week. And I'll erase all these lines so I can draw the forecast for next week. This is a fairly simple chart that you're looking at here. It's candle charting with a 20-period moving average. And as you'll see in the other indices, I add the volume so that we could forecast and see how the volume relates to the price. Now, the Russell 2000 is, like I said, a broader based index, and this is a fairly strong green candle. So what I think we will see for next week is a rally early in the week to break through this high right here. I think we're going to break through that resistance, and then I think we'll start to pull back towards the end of the week. So there you go. There's my forecast. Early on a rally, I'll pull back towards the end of the week with my target price right at the end of that line. Now, if we look at the S&P 500, that ticker symbol SPY, you'll see, again, my forecast lines are still in place from last week. Here we had the Friday report went out here. I said we would move up a little bit early in the week and pull back. That's exactly what we did on Monday. We hit my target price. We pivoted lower on that bearish engulfing pattern. And on Wednesday, we actually hit my target price and even went a little bit lower before bouncing off of that 20-period moving average. Now, I'm going to erase this line right here, and I'm going to draw my forecast line for next week, and that will be higher prices on the S&P right there. I'm going to leave that in place. I think we're going to rally a little bit more with my target price being at the end of that line. Now, why do I say we're going to rally? Because today, not only do we have a green candle, but we have a green candle on higher volume. That tells us that the buyers are moving into the market. Now, we had a jolt to the upside with the Qs, which is the NASDAQ market. Amazon especially came out and had incredible earnings. But as I review what we said last week, I said that we would most likely move lower early in the week, with my target price being right there towards the moving average, and that's exactly what happened. And so we hit the target. We're right again on the NASDAQ, and Friday we closed on super high volume with that very nice long green candle, thanks to Amazon and some other companies that put out pretty good earnings today. And so what I think we'll see for next week is a continuation of this rally. I don't think it's going to be as big as what we saw today, but I think we'll see higher prices, and this gap is going to act as a price magnet. So let me erase this line right here, and then I'm going to explain more about how this gap will work. Gaps generally fill about 80% of the time. So I think that is going to act as a support level once it fills, and I think we'll start moving back down towards the end of next week as we work to fill that gap. So that's what we're looking at. Higher prices next week with a pullback towards the end of the week as we gravitate back towards that gap price. Now, the diamonds was the only market that didn't cooperate 100%. We had a little bit of a pullback like I thought we would. We have a bearish engulfing pattern right there, but we didn't pull back all the way. What I'm going to do for the diamonds, because this is a little bit different than the Qs, and most definitely a lot different than the Russell 2000, because the Dow stocks are only 30 stocks, and I'm going to erase this and just move it over to the right. I think that bearish engulfing pattern is going to continue to act as our sell signal later in the week. And there's a small gap below the market here, and there's a small gap below the market there. So I think the Dow is going to pull back towards those gaps and ultimately find support right around the 229 level for the diamonds, and that's 22,991 for the Dow Jones Industrial Average. Remember, the diamonds here represent just a fraction of the Dow Jones Industrial Average, so you can see the price difference right there. Now finally, the VIX. I had for weeks now been staking my reputation on the fact that the gap on the VIX would fill. We did that on Wednesday perfectly. Look at that. This is the gap I was talking about. Gaps on the volatility index fill 100% of the time. So my forecast was that the VIX would rally, and it did, like I said before, to fill that gap. And then once the gap filled, we reversed. Now, as I erase this line right here to clear this up for you, this is a fairly strong red candle for the VIX. And I think that the VIX is going to drop earlier in the week to test the support level down here. But ultimately, I think the VIX is going to rally. And I'm going to leave this on as a 2-week forecast. So I'm going to forecast that the VIX is going to pull back next week. But ultimately, in the longer term, I think the VIX is going to go right back up, which is ultimately bearish for the S&P 500. Now, our percentage of accuracy continues to be the most accurate in the world, and we teach people how to read the markets, not just the general markets, but also individual stocks. And if you're interested in learning more about how we do that, just go to the Market Guys website, click on the video tab right there, and that will bring you to a library of videos called Market Shots. They're very short videos, usually 6 to 8 minutes long, and you can learn about fan patterns, and you can learn about the rubber band effect and trading the gap right here. I talk about the gap almost every week, and you can learn how that will help you with the entry and exit points for your trading. And we pride ourselves on providing first-class educational content for investors and traders. We hope that you follow us and join us along the way. Thank you very much. Have a good weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.